How much money would you get if you invested $10,000 into ULTY with its now weekly dividends? Welcome back to the channel, guys. My name is Spencer, and I talk all about income investing, typically with ETFs, and YieldMax, of course, is a common theme on the channel. Now, if you're not familiar, ULTY used to pay monthly, and it's now a weekly payer, and since then, it's been a little bit choppy. I mean, the whole thing has been dropping for quite a while. We're going to look into the price. We're going to go over what YieldMax is saying about this fund, how it works. We'll check the dividend history, and then factor everything in from the most recent weekly dividend, which, honestly, it blew me away. It's been really, really insane as a weekly payer, and it's very, very cheap, meaning you can buy a lot of shares, which is absolutely insane. So I hope you guys enjoy. As always, if you're into income investing, making money in the stock market, specifically with dividends, you're in the right place. Don't forget to like the video and to subscribe so you don't miss our upcoming giveaways, events, videos, and more. Thank you guys so much for watching. Let's roll the intro. Prior to it going weekly, I would say that ULTY was the best description of NAV erosion that I've ever seen. I mean, consistently falling over and over and over. On the 1 month, we're down almost 16%. 6 month, 37%. 1 year, 64%. And 5 year, we've only been around for about 1 year. It looks like almost exactly 1 year. And so in 1 year, it's down 64%. So what is the value? What's it worth? I'm going to throw it into a drip calculator as well and show you guys what your return would be. I don't know. I haven't done the calculation myself yet. So I'm really curious to see if this thing would have even made you money holding it. And is this going to change with the weekly payments? It seems there's a lot more hype around it, and I definitely get it. We love our weekly payers, but is it going to be worth it? That's what we're trying to figure out as investors trying to make money in the stock market. So to understand ULTY a little bit better, we're going to check out YieldMax website, which I always recommend everyone do if you're interested in a fund. Check out their website, see what information you can get, see if it's fitting your investment style. So we're going to jump right over there. A distribution rate of 77.21%. Wow. I will say ULTY is not one that I'm very familiar with. It is not one that I've owned in my Roth. It's one that I've heard about, people have talked about, but because of that chart, I never did buy into it. And I only did one video on it, I think, if I even did, because I hated the chart. So I don't usually make content on stuff that I myself wouldn't at least consider buying. And this one, I was like, I'm not going to buy it. So I never made really, I don't think I ever made content on it. Maybe I did a few months ago, one video talking about it because I was like, what's going on with this? Why does everyone love this? And they apparently were switching up their style at that point, which is why maybe there is hope. And, you know, we've still seen it fall quite a bit. But they have all their key boilerplate language here. Generate monthly income, now weekly. YieldMax, if you're watching this, you got to update that. Come on, come on. We've had 2 weekly payments already. We gotta be, you know, with the times. And then, of course, like it's a high degree of risk. They say that on all their stuff. So we've had 3 payments in March. The first one was 46 cents. The next one was 10, and the next one was 10. So this 46 cent is likely just the reoccurring monthly, which we're not going to see again, of course, because now it's weekly. So we're roughly going to get around 10 cents, maybe a little over 10 cents every month, which would be solid. And that's going to come down to all 4 payments. It looks like so far we're a little bit low. I mean, if it paid out 46 in the month and now it's paying out 10.10, we're looking around 40 for the month. But maybe it's messed up because it's the first week. Maybe it's messed up because we already had 1 March payment and it was the old style payment. I don't know. I'm waiting to see. It'll definitely be interesting. I'm also going to pull this up on Seeking Alpha to verify everything. And that's where we'll run our calculation to see exactly how much you're going to get in yield based off those first 2 dividends. So same kind of stuff that we see, actively managed. This is the interesting part. So ULTY's investment sub-advisor will typically select between 10 and 15 underlying securities, primarily on the basis of such securities' implied volatility levels, and will regularly review ULTY's portfolio to determine whether one or more of its covered call strategies should be decreased, increased, or eliminated, and whether any strategy should be implemented on any new underlying security. So I don't understand this as much as I thought. I thought I had a better understanding of it, but I just don't. So it's a sub-advisor. That's the term they use, right? Sub-advisor is going to be selecting these stocks based off how much volatility they have. So the goal, right, is I guess higher income, but at a higher degree of risk, and overall return based off the underlying securities falling, which is definitely a bummer. Due to ULTY's investment strategy, the indirect exposure to gains, if any, of the share price of the returns of the underlying security is capped, meaning if one of these stocks in this takes off, you're not going to get the same return as you would just holding that stock, which we know and we're used to with YieldMax, RoundHill, Defiance, all these investment funds. It's the nature of how these things work. And then we have the investment objective, current income, and secondary exposure to the price return, which could be good. There's a lot of info on here that I definitely always come in and check. We have a crazy gross expense ratio of 1.24%, which is one of the highest that I've seen. Simply because it sounds like there's a sub-advisor too. He's got to get paid. A lot of people are working on this, so a lot of people got to get paid, which is a bit of a bummer. Large asset, $227.5 million. Not huge, but bigger than a lot of the ones that we've seen that are barely over 150. We can see the returns 1 month, 3 month, 6 month, year to date, 1 year. And so this is cumulative, meaning I think the dividend's being reinvested at that point, which you would need. And then we can see their current holdings. I don't know a lot of these. Coinbase we know, but there's also Coin, there's Carvana, there's all these. So they're switching through these all the time is what it seems. They're pumping in new ones all the time, trying to get the highest volatility. So if stuff's going nuts, they're probably gonna be buying in. And it's not a terrible idea. I don't hate it, but it's expensive, and so far I don't think it's been working out. Let's check the dividend history. Let's calculate our yield and see exactly what you would make on this. So we're going to run some numbers. According to Seeking Alpha, the last two dividends we saw 10 cents and just under 10 cents. So what we're going to do, there's 52 weeks in a year. 52 divided by 2 is going to give us 26. So we're going to take our average of 0.1025 plus 0.0977 equals divided by 2 equals, actually we don't even need to really subtract or anything. We'll just do it times 52 because we're using an average. And so then we get $5.21. So the current price is $6.58. So we're going to do this divided by our 6.58. Boom, multiply it by 100 to get a percentage, and you have a 79% dividend, which is insane. That is really crazy, I will say. An 80% return or 80% yield is definitely not one that I think could last for a long time, but we will be using this in our calculation to see what you'd make for the next 30 years. When we go to the dividend scorecard, we can see that they have it at a 163% yield, which is still very, very solid, higher than our 79%, but not terrible. And they have an annual payout of $10.73, which is definitely well over 100% yield since we're under $7. But the key factor with these is total return. I get a lot of people want income, and I like income, but I also like solid total returns. And with that, I want stability. I want consistent NAV. Even if the NAV is not increasing, if it's not decreasing, I'm okay with that. If it can stay at a set solid price and get me insane yields, I love it. So let's check out the drip calculator, and I'm afraid it might be a little bit messy. The drip calculator from dividendchannel.com. This is going to invest $10K at the inception of ULTY. And oh yeah. So it's rough. It's been out for over a year now. Your total return is down 7.10%. So this is what I'm saying. It doesn't matter if you are getting $12 in dividends per share. If your value is tanking from $20 to $6.50 at the end of a year, like you can't keep up with that no matter what. So it is ugly. It's actually uglier with dividends reinvested because the fund just continues to fall. And that's typically a red flag for me. If you're not getting more money out with the dividends being reinvested, depending on what the chart looks like and what's been going on with the fund, huge red flag. So that's the thing. This is just, why is it blinking? Oh, it's throwing me off. Okay, whatever. It's just ULTY. It's why I didn't invest in the beginning. It's why I didn't talk about it a lot on the channel, because I put it into the drip calculator and I was like, it's not really making any money. Like, I didn't want to be exposing people to this if it was wasting their time and my time talking about it. But maybe things will change. So what I did do, I did put this in our weekly dividend ETF account, on our Moomoo account. So it is going to be tracked. It's going to be thrown in with the other weekly payers, and we're going to see if it's better as a weekly. Is it making money as a weekly? Because I'm really, really curious. Now, we try and factor everything in. I'm going to do my best bet to calculate it just based off the latest return, and then we'll throw in exactly what you would get if you had invested similarly to the beginning and it traded the same way, which is harder to factor in, but we're going to do it. So I hope you guys enjoy. Let's jump into those calculations right now. On MarketBeat, checking out their dividend calculator, I've got everything factored in for ULTY. So we have it weekly, we have drip is on, we have the share price, number of shares. This is per $10,000 invested. And then we have no annual contributions because we're investing $10K flat, and then we're just going to hold it. So we're not going to add any more to it. We're just going to have drip on, reinvesting to see what it gets us. Now, the numbers are going to be pretty insane. They're not going to be this insane, but they're going to be pretty insane. And mostly because this yield is absolutely crazy and we're not factoring in price drop. Now, why am I not factoring in price drop? I'm going to. We'll factor that in at the very end. But why I'm not putting it in right now is because I don't know how it's going to perform weekly. We've seen some crazy switches with some of these. When they switch to weekly, they'll start trading sideways or start increasing even, so YMAG and YMAX, I think, were some of the first to do it. And they have dropped recently, of course, with the market falling. But I don't want to try and jinx ULTY and say it's going to go down. I'm not going to say it's going to go up. So I'm not going to factor that in immediately. I will throw it up at the end for you guys to see because it is something I want you guys to have on your radar. I don't think it's going to, if it keeps going this low, it's going to be in the dollars, in the low dollars pretty quickly. So we'll hope against that. But let's check this out. So we can see that our dividend portfolio, after 1 year of it invested in ULTY, it's paying weekly and drip is on, we have received $7,901 in dividends, which is absolutely insane. Our ending balance from 10K goes to 21,906. And I'll tell you why. The reason why our total return is 119% is because we have no NAV erosion and we're dripping weekly. So you'd think, oh, it should be 80%. It's not, because we're buying every single week, and it makes a massive difference, especially when you have larger sums of money. So 5 years in, at 5 years in, oh my gosh, with drip on at 5 years in, it's absolutely insane already. So we can see total dividend payments over 5 years, 328,000. Absolutely crazy. Total portfolio balance now is $504,000. I can't even keep up. Same average annual return, and our annual dividend income now moving forward is $600,000, which is insane. That's what we're making now. So we have all of our dividends reinvested in. This is what we're going to make based off that weekly drip. It's only going to get more and more insane from here. And sometimes I think, why do I even do this? It is fun. It's fun to look at. After 10 years at this rate, you can see 25 million. You're getting 17 million every single year in dividends. Or no, you've gotten 17 million. Now you're going to get 30 million. And I mean, this is, again, after 10 years. So the reason I do these calculations, one, it is fun. I know that it's not going to do this. I will say that pretty confidently. I'm not a financial advisor. It's not financial advice. Do all your own research. But I can pretty confidently say ULTY is not going to return 254,000% in the next, that was only 10 years. 20 years is just going to get worse, 64 billion. It gets into the trillions even. And I do like to do this thing where, in 30 years, what would it be at? Who really knows? Some quintillion, quadrillion, So, but going back to 1 year, here's the important factor. If we go back to 1 year, we can see that we have $21,906. But we have to check. What did it do in the last year? We're down 64%. So we're going to factor this in. We're going to subtract 64% from it, which is tough. So we're going to do 21,906 96. We're going to multiply this by 0.64. And now that gave us $14,000 lost. Yes, lost. So now I'm going to subtract the original amount, 21,906.96, and it gives us a negative, but this is where you would be positive, meaning you would be at $7,886. And that is why we use the drip calculator, to show us that this thing is still in the red. And now I know what you're thinking. Well, if our yield is 80% and we're only losing 64% in value, why is it not still positive with our 10K invested? Well, because you're using the power of compounding against you. Because now every time you buy in, that money is lessening every single time. So if you think the first half of a year, your first, 6 months, 26 weeks, all of those dividends are being cut by 32%, roughly. I think if you average it out, it's 32%, meaning you're losing a huge portion of your money very, very quickly. And you're not able to just keep buying more and more and more because your money's going down. So every time you buy, it's a negative, and that's how it works. So that made sense in my head. If it doesn't make sense, or if you think I made a mistake, let me know in the comments. You guys are really good at pointing that stuff out. I don't mean that in a negative way. Sometimes I make mistakes, guys. I'm human. I do my best. But sometimes I just have a mistake. So it's always really helpful when people point that out, and I really do appreciate it. But that's the truth behind ULTY so far. With no NAV erosion, the fund looks beautiful. But in a perfect world, I would just quadruple my money every minute, and I'd be a quintillionaire. Holy smokes. But That's not. We're not in a perfect world. And so it's important to factor in these other things. I am still very curious how it's going to do. I'm not knocking it. I'm not saying that from here on out it's going to be terrible. I already own it in the weekly account, so my money's invested. I have skin in the game now. So I do hope that it does well. But all in all, it just hasn't so far. And I'm pretty sure we can all see that. So I hope you guys enjoyed this video on investing 10K into ULTY. We have seen in the past the fund has dropped like crazy. Hasn't been a good investment. I mean, unless you like losing money. But who knows what the future holds. Being weekly could change everything. And I am definitely hopeful. Still got some skin in the game, so we will see what happens. I'm not trying to knock the fund. I know some people really like this one, and definitely tell me why you like it down below in the comments, how it's done for you, because I'm curious to see how real investors are using this. Now, I also want to say thank you guys so much. This is the last video before I will be going to Vegas with my fiance, because you guys watch the channel, you subscribe, you basically have given me a platform where people want me to talk about stuff. So I'm going to an ETF conference where I'll be sharing a ton of information about all the stuff I learned there from some really cool ETF companies. So a lot more content will be coming soon, including a recap of what I learned at the conference, what goes on, and a bunch of stuff all in that realm. I'm really excited. It's going to be absolutely amazing. And it's all because of you guys. It really is. It's because of the support, the kindness, the kind comments, everything. You guys liking the videos, all of it makes a massive difference. And I really would not be anywhere without your guys' support. And so I want you guys to know I am so grateful. I appreciate it absolutely so much. And so, as always, I appreciate you guys. If you enjoyed this video, you're probably going to like these ones popping up on your screen right now, including the weekly pay videos, as well as our last weekly dividend ETF update. Check that one out because things have been going insane, and almost insane in a good way that I think you'll be surprised about. Thank you guys so much for watching. I'll see you in the next video.